Right, hello, I'm back again. We'll get straight into this one, but always appreciate a like and a subscribe. I want to try and get to 1,000, but hope you're all well. So this is price action from Friday the 18th of October. So I've got 4 trades to go over, 2 losses and 2 wins. So try and stick along for it because you will actually learn something if you apply what I'm talking about and actually watch my videos and learn, but up to you. So anyway, the first loss we'll go over was this one, which was set up to be a 1 to 4.5R. As you can see, it's just a standard continuation setup. Trend is bullish. We're making higher highs, higher lows, equal highs, which is what our TP was set at, which, as you can see later into the day, New York session, that was taken. But this was a loss which I've analysed, and as you can see from the note, my stop loss was hit, but it was down to incorrect POI selection. So my entry was actually part of the inducement, because as you can see, I'll mark it up now, but basically this zone here was actually, I'll hide this zone quickly. As you can see, this zone here was actually the zone which I should have entered from. So this was we're on the 3-minute chart, AUDUSD, but as you can see, this internal protected low, which is where I took my setup from, this is actually inducement here, and this would be a deeper mitigation setup, because you can see we've actually mitigated the zone twice already, but we come back into it deeper and mitigate it again. We've also got inducement here, so I used this inducement for my entry and entered off of this zone, but I didn't actually notice that the zone I was entering off was actually inducement for a deeper mitigation setup here, and this was inducement again as well. So that hit stop loss, only just hit stop loss, to be fair. I mean, had I had a slightly wider stop loss and gone for the 4 pip stop loss instead, I would have stayed in and it would have hit for probably a 1 to 2 if I'd extended my stop loss, 1 to 2.25. But then we move on to this setup. I was still happy with the trend, I was still happy with AUD fundamentals, and I was still happy with the DXY outlook, which was bearish. So I was happy to take longs, and I knew we still had these equal highs which were likely to be swept before we continued down bearish. So we also had this build up of liquidity above price here. We had a break, we created this was a 1-minute continuation, so I'll go drop to the 1 minute quickly for you. As you can see, here's the setup. Obviously TP is aligned with those equal highs, which, as you can see, makes a lot of sense, because as soon as we swept it, the liquidity was taken, orders changed hands, and we began bearish order flow and had a change of character within this area of price here. So that indicated to me that order flow was going to become bearish, which we'll get onto in the further trades because they were shorts, and that was the reasoning for those shorts. But anyway, we've gone over the loss. We then see we had this 1 minute demand POI after the internal break. The zone had imbalance. We also had nice build up of inducement in this range, because as you can see, this is a price range here which we broke out of, came into the zone, mitigated it. I had my entry after we started to respect off that zone, so my entry was 1 candle over like that. So we jumped in to the zone, mitigated the 0.25 level, we then started bullish. I got in, we had a deeper mitigation, and it ended up becoming an IPL respected setup. So that could have been something that you were waiting for if that's the more favourable setup, but that again will link back to data collection. That's why it's important to collect data on your setups and what type of trades you're taking and which ones are more probable, because some people who trade like this may have data on IPL respected setups, knowing their higher probability. They could have waited, and then they could have got an entry when we whipped here from there, tight little 2 pip stop loss, which is in the criteria, trading up to the equal highs, and again, look, you can see the difference in risk to reward, 4.1, whereas I only got 1.85. I could have used the 2 pip stop loss on this setup, but again, and got a 1 to 3.7, but I didn't because I wanted to cover the larger 3-minute zone as well as that internal protected low on this setup, just to increase the probability of, if we did have a deeper retracement like this, I wanted to be ready for that, just to increase the likelihood of me staying in the trade and it hitting take profit, because I was confident we were going to sweep those equal highs and this build up of liquidity from the range formed throughout London into early New York. So that hit take profit. As I said, we had the change of character, which you can see here. You sweep the high, we then had where that move originated from, broke. So that's your change of character there, which indicates bearish order flow on the lower time frame, and that aligns with the higher time frame stuff and the bearish AUD fundamentals. So we then come down. I wasn't at the charts at this time, but when I did get back, I noticed we'd had internal break. We then formed a 3-minute buy to sell wick, which you can see is there, 3-minute buy to sell wick, and we also had another further break, which I took a loss on this, because I will explain exactly why I took a loss, basically, because I've gone over it this morning in my notes. But what happened really here was we had the break. This isn't your extreme POI, so this 3-minute buy to sell wick is actually your extreme POI, and that would be your lower probability setup, this 1-minute continuation from the 1-minute supply. It had imbalance with inducement here, so it was a valid continuation setup, weak low. We came in to the upper percentile of the supply. We then had this large bearish engulfing candle, which for me was a really good confidence for entry, so I entered after we'd broken this low with the bearish candle. I then had stop loss 2.5 pips covering the zone and the internal protected high. Target was the weak low, but as you can see, we consolidated around in profit just at break even for a while before a nice large move up into the 3-minute buy to sell wick, before sweeping the liquidity into the upper percentile. And this was another valid short continuation, because we have inducement built up below the zone. Another form of inducement is the setup that we got in again from the 1-minute, and 3-minute you had a nice imbalance below the zone as well, which is an additional confluence. So as you can see, we swept that liquidity. We then came down. This trade was towards the end of the day on Friday, so that's why the target is conservative and was aimed for the consolidation. I call it the origin of the move, so this is the origin of where that move was created, so I target that. That was a 1 to 2.3. We had a nice 2 pip stop loss because that covered the zone and the internal protected high. So price reacted from the extreme. This is something else you want to take into account in your data collection, because you want to know how often price reacts to these lower probability areas, because it's more often than not that price will react from the extreme. And as you can see, the entry was later on this trade, so I didn't enter up here, because if you're entering here, then how do you know price isn't going to just, because you want your stop loss covering the zone, but again, you're not going to have a 0.6 stop loss because it's stupid with spread, so you at least want to have 2 pips. But yeah, that's a better trade, but at this point you don't know if price is going to keep going up, do you? Because when price is here, that's looking quite likely that it's going to break the zone, or it's going to be an IPH setup, so you're not going to know that it's going to immediately. So I wait for that. That is a good entry there, so you could enter on the next candle because you've had a bearish not engulfing, but you've had a bearish candle, so that could be an entry. This is what I mean by rejection candles, but for me that was the real confirmation, because you've broken that large bullish candle with an engulfing. So then you've had another bearish candle, and then I decided to get in there, and then that played out, as you can see, quite nicely, straight down to profit. Again, if we were on a Wednesday, say, and there was no news, I would likely target down here, because if all of your fundamentals and externals DXY are aligned, then there's no reason why you can't target this for a longer take profit, better risk to reward. But I'll go over the DXY, because as you can see, so price was coming into a demand. If we jump onto the 15-minute, we can see that basically we had a very large demand from the news previously on Thursday, which price was being drawn to. Price had mitigated the zone, the demand zone, and had a small retracement off of it, but price was quite aggressively forming bearish legs towards the demand zone again, which to me should have said that it was likely going to be a deeper mitigation taking place and a sweep of this liquidity where the orange circle is. And that's why my first setup on AU, which I just covered, was a loss, because the sweep caused the push up on AU into the extreme 1 minute buy to sell wick, or the 3 minute buy to sell wick, sorry. So if we drop back down, we can see that this is the entry time on AU, the red line, and that was right as we mitigated the zone. But again, this liquidity was bound to be swept before any form of bullish move occurred. So I should have been patient and realized that this lower time frame zone, this lower non-extreme zone, was less low probability and was unlikely to be hit. So I should have had this marked up and completely avoided this setup. But again, that's why you journal, that's why you keep data, you put it in your notes, and then you refine, you learn from it, and you keep utilizing your mistakes to improve yourself. But yeah, that's 4 trades for you. Quite a nice chart to take notes from. So I hope you're all enjoying the content. Again, I'll keep posting stuff on Insta as well, so give that a follow. It's just English Forex. And again, I do appreciate a like and a subscribe. It really helps. Share the videos around, and drop any comments if you've got any questions below, because I'm active on here. I do like to engage with everybody and help people out. So if you've got any questions, then please drop them below. But other than that, hope you all have a good weekend, and I will catch you in the next one.